Today's guest is Sean Tepper, who is the founder and CEO of Tikr, a groundbreaking stock screener and education platform with over 9,000 customers in 50 countries. Sean started Tikr as an Excel spreadsheet in 2016, achieving impressive returns of 15% to 50% annually. By 2020, he had transformed it into a full software solution, empowering investors worldwide to manage their investments with confidence. Tune in as we deep dive into Sean's journey from an IT project manager to a thriving fintech company. Hey, Sean, how are you?
Hey, Mark. Good to be here. Thanks for the invite.
Absolute pleasure. Thank you very much for being on my show. I'm really excited about this because just before we came on, you said that your basis of your company is on Warren Buffett's sort of methodology, which I think is very interesting. He's obviously the poster boy of investing. So we're going to go deep dive into that area. So I'm really looking forward to hearing more about Tikr and yourself. But the first question I ask all of my guests is, what does a business mindset mean to you?
Yeah, good question. So, business mindset, you have to remove emotions from the equation and focus on a business being a profit center. If it's not a profit center, it's not really business. It takes a while to generate a profit depending on the business model, but that should be the mindset is you need to serve people, it needs to be a profit center. And if it's not, something has to change.
And how long was it? So you started the business in 2016. How many years was it till you were actually profitable?
Yep, I can give you context there. So I created the Excel sheet for Tikr for my own usage in about 2015 or 16. And
Right.
prior to that, I had tried angel investing. I'll keep this really short, but I was
Okay, go
investing
for
in
it.
private
That's fine.
businesses. I built and went through a merger of a business through 2006 and 2010. It was just an agency building software and websites for small businesses. Long story short, there was no exit multiple on that. It was pretty much all debts and liabilities wiped clean. And then I thought, well, I'm a smart guy. I could build a business, but let's build a tech company. So I was investing in private tech, didn't make really any money over 5 years, made some money and lost some money, but it was like break even, which that's not good investing. Then I created the Excel sheet. I'm like, I'm going to do this the right way, following Warren Buffett, Charlie Munger. Found another guy out there by the name of Phil Town, read as many books as I could, and curated and used this Excel sheet for 4 years just for my own purposes, making returns, as you mentioned earlier, between 15 and 50% per year. S&P 500, to give you guys context, returns about 8 to 10% per year. So it's definitely beating the market. It was really 2019 is when I was like, I might have a SaaS idea, but let's confirm. Sent this Excel sheet out to a few retail investors, and everybody's, yeah, you should turn this into a software. And it was like a 10-year time period up until that point that I was looking for that SaaS idea, whether it's an email marketing platform or data analytics or whatever, but it's so saturated. I wanted to find something with a narrow moat, not a lot of competitors, and this happening perfect. So yeah, it went live in 2020. That's when the business went live. We are now 4 years old. We're a SaaS business. We could turn a profit this year. We're at about 10,000 customers now, just over around the world. If we could get to about, I was doing the math, if I could get to about 12,000 customers, that's a sweet spot where we may turn the corner to a profitable SaaS business. SaaS is so hard. If you have an agency like you're just doing work on your own, you can be pretty profitable quickly because it's just a service business, but SaaS has got a lot of overhead. So
Yeah. So we'll talk about that as a little bit later because it is definitely, and the whole idea of creating a SaaS business, it just sucks money. It absolutely, because you're constantly trying to iterate and make it better. I worked for a number of years helping build software for corporates,
sure.
and I know I'm not a developer. I helped with the sales and it helped with the sort of business analyst and building the software.
Yeah.
And I know the time, effort, and that it takes to build these softwares, and I will interested to hear about whether you've had any investment as well. But all that will come a little bit later. I want to ask you
We'll
the
get there.
second question, which is about your upbringing. Tell me one thing about your upbringing which reflects on who you are today.
Yeah, I give a lot of credit to my parents. Raised me with high integrity. If you say you're going to do something, you do it. Come hell or high water, you don't deviate. If you say you're going to do something, you do it. So my parents, they had high integrity, raised me on the Christian values. I'm a Christian, so I'm not a preachy type person, but I do incorporate a lot of basic biblical principles in business and life. And some people pick up on it and some people don't. But it's like you do what's right. You don't do it for the money. You provide value to others. And that really holds true. I try to stick to it. I've had opportunities with Tikr where there have been like crypto exchanges and precious metal opportunities with celebrity endorsements that have come to me
Right.
with checks. And those aren't wise investments. And I was like,
Yeah.
nope, I got to turn down the money. Could have used the money, but I'm going to turn it down because it's not the right thing to do. So
So was your family entrepreneurial?
my mother, she was not, which is fine. She worked with a lot of people who had Down syndrome, autism, cerebral palsy, a lot of people who were at disability work centers. And a lot of
Right.
people in this industry would call it more ability work centers, but it was really good perspective on helping those in need. I loved it. It was, I got to meet a lot of these people. And then my dad was actually in sales. He was a chemical salesman for the dairy industry. I'm in Wisconsin, and there's a lot of farms
Yeah.
around, and you
Yeah.
need cleaning chemicals to clean the vats. Otherwise, you're going to have spoiled milk. And he was very entrepreneurial with his sales practice, like
Mm.
how he approached the business and how he treated his customers. That was a big foundation. In fact, my favorite quote from him on a business side was, there's so many things we all have to do as business owners, but always prioritize that which generates revenue.
Yeah.
So, of the 1,000 things we as entrepreneurs need to do, we've got our daily checklist or whatever we do. Really rank order them. What's going to move the needle the most? What's going to generate the most revenue? And then focus on that. I always remind myself because I'll get caught up in stuff that's minutia,
Yeah.
but is it really generating revenue?
Yeah.
So I go back to them.
Yeah, that's great. Some influences that I've had through my life, they keep you grounded when you get excited about a new project or a new like
Mhm.
avenue or a new revenue stream. Having that sort of in my head to be profitable, is it worth your time for what you're trying to achieve? And so it's always very grounding to have that sort of voice in your head, just to say, because I get excited when new projects or new things come along. I'm very entrepreneurial in that sense. I probably do suffer from the shiny penny syndrome, but I'm very much conscious or self-aware of it, so I don't
Sure.
jump at everything. But I think it is something that we do have to just try and keep on coming back to as entrepreneurs. Is this actually going to add value to your clients, in essence,
Right.
or your business or your employees, that's really going to turn the dial when it comes to profitability or revenue or KPIs when you're looking at the indicators for you? Thank you for sharing that.
Mm.
So we've talked a little bit about the start of Tikr. And so let's just explore that sort of 4 years where you were investing your own money
Yeah.
into the model that you were using. Talk me through the model that you use, and you say it's inspired by Buffett and Munger. What is that strategy? How were you doing it in the first 4 years?
Yeah. So give context on other platforms out there. They use a lot of bells and whistles and indicators that are messy. And in many cases, you don't know how to make a decision. So I knew like I needed something with a little more rigor. Here's an example. I'm not going to give a name of a platform, but there's platforms that'll give you like P to E ratio, which is like price to earnings. And then they'll look at market cap and then make a decision. And it reminds me of, if you ever seen the movie Moneyball, when the
I have.
older recruiters are looking at baseball players and making a judgment call based on how handsome they are, how the son of a ball pops off a bat,
Mm,
or what their girlfriend looks like.
mm,
And then Brad Pitt's character brings in the analyst, played
mm.
by Jonah Hill, and
Yeah,
just uses mathematics and a
yeah,
lot of mathematics to cut through the clutter and really coming to the realization it's those who win games, it's getting on base. So I knew like these indicators that people were using, they were just missing the mark by a long shot. And when I started looking into what Warren Buffett and Charlie Munger did, they look at a bit more. But then Phil Town, I have to give a lot of credit to him. He's not as popular as Warren and Charlie, but he provided a lot of mathematics in his books. And my background, after my first merger, I got into corporate project management. Your best friend is pretty much Excel. And I've always been pretty decent at Excel, and I'm a nerd that way. And I'm like, all right, so let's put these equations into Excel. And it was looking at a whole list of data points like revenue year over 5 years. What's that
Right.
growth rate look like in net
Right.
income, your profitability, EPS, which is also profitability. Then you got free cash. Then you got debt. Then you have liability, assets, equity. There's a long list. And when I looked at that and then seeing the returns like Phil was doing, I was like, this on paper, this makes sense
Right.
because there's so many more data points to use and they're logical data points. It's not like market cap really doesn't matter, but profits, that matters. So that's when I put it into Excel. I tweaked it, and then I needed to create like a traffic like rating system. Like when you stop your car at the traffic light, it's either green, orange, or red. It's a
Yeah.
very, you know what to do. It's very definitive. So I needed that same system. So that's why Tikr in this Excel sheet, I created it so it's on sale, watch, or overpriced. And you want to look for those on sale stocks are green, watch is gray, and then overpriced is red. And I color coordinated this Excel sheet, and I get this, it would take me 10 minutes to copy and paste data points from like Yahoo Finance over to this Excel sheet. But at the end of the 10 minutes, I knew I had a definitive buy or sell. It wasn't this like feelings or emotions like, yeah, maybe Tesla's a good investment, or maybe everybody's talking about Nvidia right now. Is Nvidia good? It was very definitive. And after then using my own money and testing the results, I'm beating the market by a long shot here. So I knew I got to get away from this Excel sheet, just have a software, just
Mm.
pull the data in from a database, analyze it. And right now we've got over 40,000 stocks, and it's all real time. But yeah, it was painstakingly time consuming in the beginning.
Um, for an individual, how many stocks would you suggest someone should have? Because obviously with funds, you like, because I use a fund that does invest for me, and
Yep.
they're doing geography areas and they're doing percentage wise. So you do 30% US, whatever, etc. And therefore they're investing in a multitude. And I know there is a weakness in funds that it's an artificial percentage that you're doing per geography, but just as a normal average investor who's looking to get into investing using Tikr, is there a number? Is it 10 stocks you should have? Is it 2 stocks you should have? Is it 20 stocks you should have? How do you help? What would you advise as a starter investor to invest in the number of stocks?
So we'll take a step back. I'm going to use a quote here, and then we're going to drill into what does this all mean.
Yeah.
So one of my favorite quotes from Warren Buffett is diversification is an insurance policy for the ignorant. So what does
Okay.
that mean? There are two buckets you fall into if you're an investor. You're in either wealth building mode or wealth protection mode. And if
Yeah.
you're in wealth building mode, that's when you're still working. You either work a job or have a business, and you have a timeline to achieve financial independence or retirement. It could be 5 years out,
Yeah.
10 years out, 15 years out. But in that case, you want to be in individual stocks in between 10 and 15 stocks. For example,
Right.
both Warren and Charlie have mentioned about 30 stocks or less.
Yeah.
If you can get it closer to that 10, that's really good. I hold 10 stocks. When you join Tikr, you can actually see my portfolio, what I'm
Right.
invested in. It's transparency. Um, Ben Graham has even talked about when you get over 30, you're essentially creating an index fund. That's wealth building mode, and you should be expecting to make between 15 and 50% per year. Most people in the world believe they are behind the eight ball. What that means is they feel like they should be further ahead with their investments. You have options. You can get a second job, you can get a third job, you can work around the clock, or you can get money working for you. That's wealth building mode. Wealth protection mode is when you're at financial independence or retirement. In that case, you don't want to be in individual stocks. You can, but you want to move to an ETF or two or three, an index fund, two or three, or maybe mutual funds just to have a higher expense ratio. So that's why we tell people if you choose between the three, I recommend either an ETF or index fund. You're going to get about 8 to 10% per year. There are
Yeah.
too many people out there I see in their 20s, 30s, and 40s piling into funds. And the analogy I use is let's say you show up at the Indy 500 And all the cars, they are going about 230 miles an hour, except you show up with like a 1992 Honda Civic. Your top speed is 95 miles an hour.
Yeah.
You've got the wrong tool for the job. It's
Right.
way too slow. So wealth building mode, you want to be in about 10 to 15 stocks.
10 to 15 stocks. Interesting. And
Yeah.
how do you decide, with the mathematics behind it, how do you decide when to sell? At what point is there that I should be selling
Yeah.
a given stock?
Yeah, I'll give you very definitive ratings here on both the buy signal and sell signal. These are the top two questions I get the most after 4 years. When do I buy and when do I sell? Here we go.
Yeah.
All right, so using Tikr, when to buy, there are two indicators. Number one, you look for those on sale stocks. And only about 15% of stocks in the stock market make it to on sale. It's very hard to get there. We have a very rigorous rating system. So number one is on sale. Number two, we have a tool in Tikr called the 4M Confidence Booster. It's powered by OpenAI, and it takes hours, if not days of research, and compresses it down to seconds. And what it does is, and I'll give the four M's here real quick. The first M is the math part of investing. That's like the profits of the business. That's called the margin of safety. So that's M number one. M number two is the meaning. That's the business model. How does a business make money? How many revenue streams does it have? Number three is the moat. That's how a business stacks up against other businesses in the same sector or industry. And then the last M is the management. That's the track record of the CEO. So doing all four, again, could take you hours, if not days. We've done rigorous testing. It took about 6 months to build this feature in itself, again, with OpenAI, but it reduces it down to seconds. There's a rating system between 0 and 100. If you can get above 80, that's a buy. If you get below 59, that's a sell. So to back up,
Right.
buying signal is when it's on sale and your 4M is greater than 80. And we have this in our onboarding and education so people know exactly what to do.
Yeah.
The sell side, it's not two-step process, it's a three-step process. So here we go. When your on sale stock changes to watch or overpriced, that's step one. Step two is your 4M score drops below 259 or below. And step three, this is key, is only sell for profit. So in my case, I made the decision years ago, I will not lose money in the stock market. Warren Buffett, another quote from him is rule one, don't lose money. Rule two, don't forget rule one. What that means is you have to remember that you're not investing in stocks. You're investing in businesses. If they continuously sell products and services that help people, their stock will eventually go back up, especially if it was a good stock. So in my case, if that stock drops below my cost basis or my average buy price, I refuse to sell for a loss. I will wait. I will wait 2 months, 4 months, 6 months, whatever it takes for it to pop back up. And that's when I sell, move my money over to something else, rinse,
Interesting.
repeat.
Interesting. And I'm interested about the research, because one of the things that Buffett talks about is that he spends 3/4 of his days reading reports on companies and industries and things like that. Are you telling me that in Tikr you can basically, using AI, you can consume that data in seconds rather than having to spend 3/4 of your day, 5 hours of your day, reading reports and assessments?
100%. And I know that's going to sound crazy to some, but check this out. We're launching a feature this week. By the time this podcast airs, it will already be out, but it's called Proven Results. And I was talking to somebody who works, this is incredible. I could not believe the numbers I saw when I saw this. So, one of my friends, he's been in the finance industry for 40 years. And he shows me, I'm not going to give you the company name, but he showed me a dashboard interface of a large financial conglomerate and showed me how you want to show how Tikr compares to the market. You want to show a chart showing lines and how it compares, as well as a little table showing like S&P versus Tikr and how did those numbers stack up. So I did an Excel export from our database behind the scenes to see I know it's beating the market by how much. And I started seeing some pretty impressive numbers. So my team just launched it on our development environment. So it's not public yet, but here are those numbers. Tikr, let's say it's on sale stocks, large cap, a 4M score of 70 or higher, not 80. How do they compare? Get this. S&P 500 returns about 80% per year over 5 years. Tikr, 200%.
Wow.
Over 10 years, the S&P is like 100, I think it was 170%. Tikr was close to 500%.
Wow.
It's
That's incredible.
crushing the market. Then I did, what do on sale mega cap stocks look like? What do on sale mega cap stocks with a 4M score? So this proven results feature shows you different buckets or funds on how it compares, and you can even create your own. For example, you could import your portfolio. We have a portfolio tracker on Tikr, so you can keep track of your stocks, or like a watch list. You can import that and see how does that compare. But I have a feeling I'm going to get this in front of people and they're going to be like, this is what I want to happen. This is the new benchmark. Our great grandfather's process of analyzing stocks needs to go away. We need to be smarter with technology. And I'm going to say it right now, Tikr is that solution. But this is not me. Like, I give all the credit to Warren Buffett, Charlie Munger, and Phil Town for really putting out the calculations data. I just organize them into software because I've been in software for close to 18 years now. So that's what I do.
And one of the M's you mentioned was the people, the CEO. That
Correct.
I always, it's my style, the way I view things. I always think the numbers don't lie, but behind every business there's a human being, there's a board, there's a CEO. In
Yes.
your view, how important is that CEO slash board of that company for the success of for a success of a business?
It's actually very important. The CEO, our analysis, our tool, we look at things such as Glassdoor ratings. Not every company in the world looks at Glassdoor, but there are statistics out there that happier employees actually do produce better returns in the stock market.
Mm,
So
mm.
we like to look for those Glassdoor ratings where the company score is, it's from a 0 to 5. If you can get above a 4, that's pretty good. And then the CEO approval, it's between 0 and 100%. If you can get above 80%, that's pretty good. So we factor that in because a good leader brings in, like, they attract people who make plays and get things done. They don't need hand holding. They don't need babysitting. They don't have egos. We do know we all have met those people that have egos, but we want those CEOs that can attract that leadership team, and that leadership team will hire other employees like them as well. That we're here to serve the customer. We're not here to serve ourselves. I've worked for large companies in the past. I've met both people within those organizations.
Yeah,
People
yeah.
who care about the customer, and then people are like, I just want to meet my timelines or deadlines so I can get my quarterly bonus. You're not doing anybody any favors. But anyway, yes, good leadership, it matters.
What about Elon Musk in Tesla? What rating does he get out of 100?
Tesla, in fact, I'm not going to hide anything from you guys. And if you guys, and this is one thing I'll mention on Tikr, all the calculations are open source on Tikr.com. There's a little education tab. People love that. The two big indicators that show transparency, you can see my portfolio, and we give you the calculations. We look at it like what Volvo did in 1959 with a 3-point seatbelt, 3-point harness.
Yeah.
It's theirs, but we're not going to charge anybody for it. Go use it, because we'd rather see people survive
Yeah.
car accidents. In our case, we want people to buy and sell stocks with confidence. But anyway, Tesla, they're on sale and they've got a 4M score of 79 out of
Ooh,
100. Again, if you can getting close to 80 is really hard. So they're actually pretty good on
yeah.
that 4M. Now, Elon, whether people like him or hate him, he does have a track record of generating returns for investors. PayPal being his first big
Yeah,
win.
of course.
Right, Tesla has returned a ton of money for shareholders. Because I do videos on our YouTube channel, I do let people know what you could expect in the future. I feel like the EV market is becoming more saturated, and Tesla has even had to reduce their profit margins to compete with other companies. So I just tell Tesla investors, if you're a diehard Elon fan or Tesla fan, just know I think the tide could go the other direction. Be careful.
But you still haven't told me what his board he's scoring for
Oh,
himself at Tesla.
I get where you're going here. Okay, so in the results, because you actually walk through the 4M, you complete it, spits out a score, and then it lets everybody know. We actually don't delineate the results, although that's a good feature request. You just brought something up there. Is this 79? What are the scores? How do they fall within those four
Yeah.
categories? But let's say it's 25 is the highest score per M. He's probably, knowing this is a 79, he's probably at 19 or 20 out of 25.
Right. Okay.
So
So still, and as you say, like he does have a track record of building businesses and being
yeah,
quite innovative and stuff. Okay. Awesome. Let's just touch a little bit about the SaaS side of it. So I
yeah.
understand that you were a project manager. I also did a similar role many years ago. Um, so the difficulty with building software is it takes a lot of time, a lot of effort to build new features. You're constantly iterating and build, like you said, like after my comment about the separation of the four M's, you're suddenly like, actually, we could just build so that you can see what the board, what the leader, what the CEO's score is. How have you been able to build a successful SaaS product, software product, and keep on iterating, keep on finding new features, new ways of doing things, whether it's simplifying the code, whether it's building a new feature? How do you do that as a leader within the software business?
Yeah, this goes back to after I went through that merger of my first business and I started doing corporate contracting. And just if you guys are interested in know, if you're entrepreneurial, but you really don't have a good product idea, the easiest transition to corporate world is project management because you get to operate like an entrepreneur. Business analyst, like what you
Yeah,
served, is similar because I've worked with a ton of system analysts, business
yeah,
analysts, project managers, project coordinators. There's a big difference. I could go into that, but I transitioned easily to project management, and pretty much what they would do is throw me at a project, whether it's building a software, rescuing a division that needed to be profitable, launching franchises. I've done that. So not just software, but I really got in the habit of being thrown at something and finding success. And I can't give the credit to myself. The credit really, one, goes to the team, but more
yes,
importantly, is listening to the customer. And I find the people out there, the entrepreneurs that build the best products, they are the best at getting feedback. You can't just do surveys. You got to do Zoom calls. Like prior to Zoom, you had WebEx or Citrix products, which are fine, but Zoom came around and just made life easier. And that's what I would do. This was over 10 years ago. I had to use those conferencing platforms, and they weren't always like we're using Skype. Like, remember that? Using
yeah,
Skype for
yeah,
business. But doing screen shares of UIs, like you do something that's designed back in the day in Photoshop. These days, I recommend using Figma. Show people this is what your experience is going to look like when you click this. This will
yeah,
happen. This is the functionality. And then you get your customers to be like, ah, Sean, okay, so I like about half of what you showed me, but it would be better if it did this and this. Okay, got it. Rinse and repeat and try to create like a cadence of, if you're not meeting every week, it's every 2 weeks minimum. And
yeah,
doing that over and over for a year. And if you can do that and be disciplined about it, then you deliver product like actual software platforms that people use and share with others and actually make money. But most people don't do the heavy lifting of put the decision making on the customers. You have to really empower them, bring them into the equation, and be a good product owner and ask them that. Because I've worked with a ton of people. I will not stress this enough, but I've worked with a ton of people out there that are straight up arrogant and be like, the customer doesn't know what they want. That's a quote that Steve Jobs would
yeah,
use.
yeah.
Not everybody is Steve Jobs. All right.
No,
Just
true.
being straightforward.
Yeah,
And that arrogance is got to go. And customer's dumb and customer doesn't know what they're talking about. You probably met those people too. It's
yeah,
nope, gone. And I actually had a few of those people in Tikr at one point. You got to get the hell out. Like
yeah,
we are working for the customer, not
yeah.
ourselves. And listening to the customer is key.
So part of when I was working, so I was managing teams developing software.
Yeah.
We were doing the sales and the implementation of the new clients. And someone worked with us at the company I worked for about 2 years, and he was an architect. a software
Mhm.
architect. So very
Yeah.
like high level stuff. Didn't want to get involved in the day-to-day activities of actually building the stuff. He'd done that for 20 years, whatever it was, a long time. And he was specialized in it as an architect. And he would say to us, it's all about building new features, bringing in, as you say, like outside sources that are that customers to get their gauge on what they would benefit from. But we've all got to think about the year project of this software, how we're able to create something unique, something different, building something and do that. That's like what you're doing. Is that what you're like, working with the customer, working with your team, trying to work out new features, trying to work out how to simplify, how to make it more consistent,
Yep.
make the coding. Is that kind of your role in Tikr?
Yeah, one of the many, and that's something I always done is been a project manager slash architect. And I was never great at design, so I would do like wireframes in Photoshop, and I
Yeah,
still do that today. And then we got a
yeah,
UI UX guy from Poland
yeah,
who's very good, like the look and feel of Tikr, both the web app and the mobile app. I give credit to him, but I have a pretty good idea of extracting the pain. What is the customer? What is the
yeah.
pain they're dealing with? And how do we create a UI UX that solves that pain? I will make that translation, put it into a design, and then get it off to my UI UX. Okay, go make it pretty and rinse and repeat. And to go higher level here, to give you the concept of where do you go? What do you work on first? We use a tool called Looped In. It's like an upvoting tool
Okay,
that allows customers to upvote their favorite features. Then you can drill into, okay, the top 10. And then you need to think about what removes the most pain, what is the most frequently asked feature, but also what, this goes back to the profit center question, what is going to generate the most revenue for the company? So you have to be thinking about not just, you're not a nonprofit helping people. They're like your
yeah,
profit center. You have employees. I have employees. Those employees
yeah,
have kids. Those
yeah.
kids eat food. Everybody's get right. So we got to be what's that balance, the most important features, but also features that generate the most revenue. And that becomes your laser focus, and you focus on those things first.
So let's talk a little bit about marketing. So, who is your target client? Who is the person that you're spending most of your marketing budget on outreach into to try and get them onto Tikr?
Yeah. So our model right now is a B2C play. 80% of our customers are complete newbies. They hear about a stock at a restaurant or Twitter or X, Reddit, YouTube, a podcast, the list goes on. And then they join a broker. Like where you're at in the UK, the big ones are DeGiro, eToro. I
Yeah.
think Free Trade and First Trade are there as well. In the
There's
States, we've
Trading
got,
212 as well. Trading 212
yes,
I've
yep.
used in the past.
Yep, a lot of customers in Tikr use that because we do have a lot of customers around Europe. And then in the States, you get the usual suspects like Robinhood and Fidelity, Schwab. And a lot of these people can join these platforms. It's very low barrier to entry. Their job as a broker is to make sure your money's safe and then you can buy and sell stocks. They don't analyze stocks. You don't know
Right.
if Apple's actually good or Tesla's good or Nvidia is good. That's where a screener comes into, and that's what we do. So in our case, the 80%, that's beginners. And then the 20% are people that they know what like market cap and PDE ratio is, and they
Right.
probably use some of our competitors. They use Tikr because it's more efficient. It saves them time. So how do we bring in that 80%? A big or a big tool for us has been YouTube. So to break down the percentages here, I'll give them to you. About 16, 17% of our customers come from YouTube. About
Right.
16 or 17% come from SEO. So we really put a lot of content out there, helpful articles teaching you how to invest, and that attracts people looking for this content. Another category is partnering with people who are like other fintechs that serve the retail investor. We have an affiliate program that starts at like 30%, and we can dial that up to 50% over time. But like fintechs are good, YouTubers that talk about finance, bloggers that talk about finance, they can join our program and get reoccurring commissions from our tool. So I'm big on affiliate marketing. It's very important. Although I have to admit, we haven't cracked the code on how to recruit affiliates en masse. Like it's hard because all these people are
Mm.
getting inundated with pitches. Um, so that's some area of improvement for Tikr. We are
Let's just touch on
also,
that. Let's just touch on that for a
yeah,
second. That whole idea.
yeah,
So you're getting industry people to use Tikr and what validate it and then give a testimonial. Is that the mechanism, or are
yeah.
you? Yeah, go on.
Yeah, some good examples there is like we've literally got all the resources, templates on like what you could talk about. You could do a stock review with Tikr. You could do a
Mm,
review of Tikr. You could do a
mm,
competitive comparison between Tikr and another platform. But if videos like that, they're evergreen. You
mm,
can do one YouTube video, or you could do one blog post, or you could do a
mm.
series of social posts talking about why do I use Tikr, and we literally have all the copy laid out
Right.
so these affiliates can promote, they get their unique link. Whenever somebody clicks it, it's tracked. And if they pay, the system we use to pay them is super efficient. The problem we have is I'm having a hard time. Like I'll reach out to 10, 20 affiliates. I'll get no responses. And
Mm,
I'll say, you can make passive income,
mm.
like literally, because not just 1 month you get paid or 1 year, it's like reoccurring. And it like everything's templated. It just drives me nuts. But we do have a few that are working, but I really want that like influencer that's got like 500,000 subs on
Yeah.
YouTube. Like they could make a ton of money with Tikr. It just drives me nuts.
Yeah, it's an interesting one because validation from people using the service is a great way of building a business. Referrals as well is another great way of being able to build a business as well.
Touch
And
on that real quick.
go for it.
Yeah, so that's like the fourth area, as I mentioned, is YouTube, SEO, affiliates, but then referrals from friends is we're trying to there's mechanisms we put into Tikr. Here's good. I like to be tactical. Like when I talk to people, it's don't just give me fluff. What can I do? So we have a mechanism in Tikr where you can click a button. It says save 3 months or save 30%. You click it. And then if you refer 3 friends,
Right.
they don't even have to join. You can just refer free 3 friends. It unlocks a 30% off coupon code, like
Nice.
at that moment.
Yeah.
So it's if we could get like 100 people to just click that button, share with 3 friends, bam, we got immediate viral marketing. I haven't seen a lot of growth. There's some growth because we do see referrals from friends as like the fourth largest category in how we're building the tool. But I have been studying PayPal
Mm,
and Dropbox, their referral programs. Here's an example. Dropbox, it's based on amount of storage. So if you share with one friend, your friend gets twice the storage and you get twice the storage in that
right.
instance. I'm like,
Right.
oh, that's pretty good because PayPal did a refer a friend, they get $10 and you get $10 at that
Right.
instance. And what I'm learning is and what kind of sparked me on this path with Dropbox and PayPal is I'm reading $100 million leads by Alex Hermosi. No endorsement. I'm not an affiliate in any
No,
way,
it's fine.
but he does have a lot of good content. I'm like, that referral program is better than what we've got in Tikr right now. So we're gonna
Mm,
play with something there. We got to figure it
yeah.
out.
Yeah, no, it's marketing is one of the things that is a constant. It's like building software. It's a constantly evolving thing. You're trying to bring in new people or targeting to more succinctness. Like I think marketing is equally as frustrating as it is fascinating in my mind because you never
Nailed it.
100% crack it. You get successes, you get things that work well, and you need to double down on those. But then you're always thinking, actually, maybe we should be prioritizing this as well. But yeah, it's gone.
I was going to ask you real quick. Do you play golf at all?
I don't,
Okay,
but I
what you
know how to
described
play golf.
there be
Yeah,
the sport of golf. I won't go into detail, but I used to be really bad. I took lessons and got a
right.
lot better, a lot more consistent. But you can hit like 20 bad shots and then you get that one good one, you're like, oh, I'm coming back.
Yeah,
Like, no, so with marketing, and that's the thing, you're going to beta test, you're going to try this and this and this, and nothing's working. Maybe the universe tells me I shouldn't be an entrepreneur. And no, you got to remove that thought process because you're going to get that one little thing to work. And then it's like, all right, I know what I'm doing. I'm a good
yeah.
one.
It's so I work with a lot of Americans and network with a lot of Americans, even though I'm based in London. And the thing, the Michael Jordan quote keeps on coming up. Like I
Yes.
missed however many thousand shots it was,
Yes.
but I made how many last shots to win a match, and that sort of
Yes.
quote. I can't. I'm butchering the quote, but it's like I missed so many shots, and it's like it is like that. Like marketing is like that, and when you get good at something, you should obviously double down on it and make the most of it, but there's always another shot to either win or lose on. I'm conscious that
I
I want to ask you the last 6 questions, but I just want to
yeah.
ask you a couple of more generic sort of questions. So first question
Sure.
is, how have you evolved as a leader?
As a leader, I would say letting go of control, that can be a challenge for a lot of people, is like
Yeah.
list out what works. Like, how do I do something? This is my process. What have I done that works? And I'll hand it to people. But I don't stress about it. You don't have to be super organized like me and keep it in different locations. Like, try to be organized, but run with it, own it. And I look at it like, and I'll keep this short, but I used to play sports. You don't want to like get out there, baseball, for example, and be like, I need you to swing the bat exactly like this. It's no, we're looking for the end result, which is we want you to be putting people on base, sending
Yeah.
people to home plate, and of course, putting runs on the board. How you get there is on you.
Yeah.
And I look at it that way. And I try to hire athletes in Tikr,
Right.
people who
Right.
played sports who are actually sportsmen, because they get it.
Right.
Like, we know what we're driving for. Like, you take your own path, but we know we want to put runs on the board.
Yeah, that's a great metaphor. I think that's so true. And the follow-on question that I ask often is, what's your risk appetite?
Hi. I actually, when I decided to really, because I won't go too much into detail, but over the last 15 years, I bootstrapped a few side hustle tech ideas, and
Right.
all of them failed. And partially like product market fit wasn't there, maybe product market saturation, there's a narrow moat. I just didn't find something. So when I came across Tikr, I found something I love because I love investing and I love building SaaS. And I bootstrapped it for 3 years and decided to go full time in year 4, even though the revenues weren't high enough to pay myself equivalent or even close to my previous salary. I told myself, this is do or die.
Mm.
I am doing this and I don't want to do anything else. Like, this is come hell or high water. I'm going to figure out a way to make this a global SaaS that has some real teeth in it. And I'm over, like, by this point, I was 40 years old. I'm like, I could be playing the corporate game for the next 20 years
Yeah.
and I'm going to be
So I'm
miserable. I got to
exactly
be
the same. I left my corporate job at 40 years old 4 years ago, and it
good for
was like,
you.
if I don't do it now, I'm at that company for another 20 plus years, and God only knows what that life is going to look like. And yeah,
Man, right?
it
Like,
was great.
it's
It's a
do or die.
lifestyle wise and everything. It's just been an absolute revelation. Yes, it's hard at times. Yes, you have struggles, but at least you're driving your own ship, and
Yeah.
that is something that I think everyone who's listening or watching is. If you are an entrepreneur or want to be entrepreneur, the flexibility is one of the biggest things for me. Having
Yeah.
flexibility of my time, as well as building teams, developing products, service. We do services mainly, but building those is incredibly rewarding, incredibly enjoyable. And yeah, it's hard at times, but it's so rewarding for lifestyle as well. The last question before we hit the 6 questions, crypto, right? Why are you not leveraging crypto?
Ticker. And the reason is we do attract the crypto traders, but do know this. We do tell people try to invest 5% or less of your net worth. The reason is crypto is not a business. It doesn't have an income statement, cash flow
Yeah,
statement, and balance sheet. There's nothing you can analyze there to calculate where it's going. With stocks, we can do that all
yeah,
day. Results prove themselves. So crypto, it can be hot 1 minute, but it can tank your, and I saw this, remember a few years ago when Bitcoin went to 60,000 and then it quickly went down to 10,000.
yeah,
There were people like taking out second mortgages on homes thinking this is going to make them a multimillionaire. They lost everything.
yeah,
It is actually a pretty stupid investment. I could talk about crypto in a whole episode. If you, again, 5% or less, because we don't know what coin is going to be the
yeah,
coin,
yeah.
because the world is moving towards a decentralized currency. It will have a single currency. We only know that's coming. The question is, what's it going to be? I'll tell you right now, it's not going to be Bitcoin because it's too energy efficient.
Right.
So I'll stop there. I could
Interesting.
talk about this all day.
Yeah, yeah, yeah. We could probably do a whole new show, another show on this. Look, we're coming to the end of the interview. There are still more questions that I want to ask you. Unfortunately, we don't have enough time. So I asked the same 6 questions to all of my guests. They're quick fire questions. They don't need a quick fire answer. They're a little bit thought provoking, is what has been described. First question is, what's the best decision that you've made?
Deciding to go full time with Tikr.
And so one of the other questions I wanted to ask you, have you taken outside investment?
No, this is completely bootstrapped. I invested
Amazing.
$30,000 on the MVP,
Right,
my own money.
amazing. What's the best piece of advice you've been given?
That's from my dad. Do that which generates revenue first. And well, that to back up a second, actually, from him and his dad, my grandfather, is you do what you say you're going to do. You stick
Yeah,
to it.
yeah. It's such an undervalued, old-fashioned way of doing business, but do what you say you're going to do, and that builds trust. And that builds trust with
Correct.
partners, with clients, with investors. It builds an element of trust, and it sounds so simple, but the number of people that don't do that. Quick story,
Staggering.
quick side story. I was talking to someone about potentially helping them in their business, and he just said yes to everything that I suggested, what I wanted, what the investment, what the return was. He said yes, and then just disappeared. And I just thought, you're not going to be successful in business because you needed to say to me, yes, I agree with this, but this probably doesn't work for me, but can we do this instead? And I just find it such a terrible way to run a business because you're just going to lose trust with your customers. And once they
100%.
see that you're like that, then that you can't come back from that, in my view.
I'm with you.
Side note. Next question. Who's helped you most in your career?
Gosh, there's been so many people. I This is a faith answer, but
Okay,
God,
go for it.
and when I say God, Jesus Christ,
Yeah.
there's so many situations I run into, and it's I need your help right now. And get this, there are key decisions to make, especially with Tikr, that it would come to me in the middle of the night, and I have to wake up and go to a notepad and be like, okay,
Yeah.
that wasn't me. And I'm very left brain, logical, analytical. I'm like, that was a good effing idea. That was not
So it
me.
happens to me as well. Time out, guys. Look, I'm really sorry. I'm having to interrupt this conversation. We were very close to the end of the conversation, but unfortunately, my camera died and the backup camera didn't record. So you're not going to get all of the final six questions. So I'm really sorry about that. But it was a great interview. I really, really loved chatting. And yeah, I just wanted to sort of say, look, that's the end of the conversation. Really sorry that it was such an abrupt ending. But we will be back with the next interview coming very, very soon. So if you're enjoying this content, please do give it a thumbs up. If you've got any comments below about my guest, please put it in the comments below. And don't forget to hit the subscribe button. I really would appreciate it if you did hit that subscribe button. So thank you very much for your time. Hopefully you enjoyed that interview, and on to the next one.